Hello traders, and welcome to this weekly video update for the German DAX. With our previous week's report, we had changed our expectation, our long-term expectation actually for the German index and also for the S&P, but this is not part of this video. Expecting prices to reverse lower towards this low or even this low here, which is the 61.8% retracement of this wave 3 and the lower boundaries of this multi-year channel and the highs of this wave here. Despite that, when the week started, there was a lot of bullishness in the markets, a lot of people expecting that the Remain is a fact, and that pushed stocks higher, and eventually prices reached this 55-week SMA, about which I have talked in one or two videos before the actual referendum, and I warned my subscribers that it will eventually provide strong resistance and prices will reverse lower from here, and this is actually what happened. And it is not only that, but it is also the fact that prices closed below the 21 period SMA, and that keeps the long-term momentum bearish, and it makes it even stronger now. Also, this the fact that the 14-week RSI edged lower, it is now at 4160. 4167 with a negative slope suggests that more downside should be expected. Looking at the daily chart, we see here the large gap that followed the open of the market after the Brexit. But we also see it is very important to see here that for the third time prices were unable to remain above those SMAs. We came to a point where all three SMAs are at about the same price, and the inability of prices to remain above them shifts the momentum, the midterm momentum, lower, and thus we expect much lower prices to come. Looking at the 4-hour chart, we will see here, I didn't talk about this count here. I was expecting wave B to have ended here, and then this should have been 1 and 2, and then this would be part of wave 3 to the downside. But as I said, last week prices continued much higher, and again we have a wave 2 that has retraced almost 100% of the preceding down move, and as I said in a previous video this week, that this is more often wrong than right, so I have put it here, an alternative B, which we can see better in the 4-hour chart. This is the primary scenario, ABC for W, then ABC for X, and then ABC for Y for wave B, and then 1 2 1 2 1 2, and those are a lot of 1 2s to digest, let's say here. So we're looking for an alternative, and that would be A, B, C for W, and then this would be a wave X, and then A, B, C for Y, with a failure of Y to make a new high here, and the end of wave B here. I'm gonna leave both counts on the chart for some time, and I will be looking at the lows of this impulse that I'm expecting to follow here. or even worse for the market down here, and I will be looking for how many wave fours I will be able to find to close all those all those openings by wave twos for this decline. No matter what is the correct count, however, the point here is that we expect lower prices in almost every time frame. We expect prices to reach levels like 8,000 or even lower, and that's about 1,500 points lower than current prices. Given the fact that the Brexit alone resulted in a 1,000 points gap down, this is a lot of downside ahead of us. So yeah, I'm expecting this rebound here to close some more of this gap. I don't know if this level here will limit the upside, but for now it looks like this is the wave A, this is the wave B, and if we have an proportionally equal wave C, it will end up here, which is also a congestion point. It is also about the level where this gap opened. There are several indications that this is a good stop point for the rebound. I will be waiting for a reaction at this level and a continuation to the downside before short selling the index, but overall the expectations are to the downside, and we will see that developing during this week. Thank you very much for watching, and see you with the next update.